Good afternoon. This is Tom Asprey for the Viper Report. It was a great day in the market. One of my clients noted that he had a doubleheader, good round of golf, and a great market. You can see the Dow closed up 251 points, NASDAQ 78, and S&P up 22, all solid gains. This is one of the pages that I use to monitor the market intraday. It's free. If you want the link, send me an email, tom@viperreport.com. Pretty much solid gains everywhere. Russell rebounded nicely, up 1%. Bank stocks were strong. Biotech up 2%. We recently recommended the XBI, so that helped that position. Market internals also look pretty good, better than 2-to-1 positive. That's what we needed. It's been the AD lines that's kept us on track for this market since the May lows. Some of you may remember this May 4th email as I was looking for a market bottom, and the reversal on Thursday, May 3rd, suggested the lows were in place. As I commented then, should you be getting ready to buy? My answer was yes. It's been a great run since then, and hope you've been participating on the long side. As many of you are aware, I use a tool that most analysts do not use, and I'm happy about that. It's the advanced decline line. I follow them on all the major averages. It flipped around just after that get ready to buy email on May 8th. Been solidly positive since then. Based on the analysis that I teach in my one-on-one advanced decline line course, it's given several good buy signals. July 5th, August 17th, and then most recently, July 10th. As you can see, today's action pushed the SPY sharply higher again. Many have been surprised in the past couple months that the Dow Industrials has actually been leading the market higher, as on paper the tariff concerns would be worst on the big cap stocks. Certainly that has not been the case due to price performance or the technicals. By monitoring the AD line on the Dow Industrials, you can see it broke out at the end of July. We had a nice setback here where we're buying the DIA, adding to that positions, and still riding alongside. We have profit targets above current levels as we close very strong, gapping higher today. Though I'm quite bullish going into year end, investors and traders will have to pick their entry points, as buying after an up day like today is not the best idea. As you remember from last month, we were looking for a setback to buy. You can see the DIA had a nice pullback from around 262 down to a low of 258 or so before the recent rally. The entry point will be important if you're going to profit for the rest of the year. In July, I started a new program. It's one-on-one training to educate traders and investors on how to use the advanced decline line analysis to spot both the short, intermediate, and long-term trend. This is the analysis that spotted the bear market in 2008 in advance, as well as all the other bear markets. I'll show you one-on-one how it can be used and teach you to follow that on a regular basis as you develop a disciplined trading plan. If you're interested, there's only 5 spots available for October on a first-come, first-served basis. If you're interested in learning more about the AD Line course, go to viperreport.com. On the top, you'll see a mentoring link with Tom's intensive AD Line course. That'll take you to the description of the course and the payment details. It includes over 4 hours of one-on-one training with me. We don't watch the clock here. We only finish when we've answered all your questions. I do all the teaching myself. It's a unique opportunity, but as I mentioned, we only have 5 spots available for October. I'll probably be doing one more series before the end of the year. Information on my advisory services, the Viper ETF report and the Viper Hot Stocks report, can also be found on the viperreport.com website. I'll be writing a new article for Forbes.com this weekend, and I'll send you the link when it's available. Hope you have a great Friday and a wonderful weekend. Thanks.